All right, so one last time, for those who have just joined, I'm Mandy Burton, VP of Member Development for the Cobb Chamber of Commerce, and we're so thankful you joined us this morning for this informative and just-in-time webinar that will have the latest up-to-date information we need on financial relief during this unprecedented event. We've all been hearing the word unprecedented a lot lately. So with that, this morning, one more time, everyone is muted. So we please ask that you keep yourself muted, and that just really helps us with background noise. And we ask that you type your questions during the event to all panelists and attendees. Be sure you select that option. That captures all the questions for us. So that helps us on the back end and allows everyone to see those as well. So with that, I'm going to turn it over to Sharon Mason, our President and CEO of the Cobb Chamber, for a few words this morning. Sharon?
Thank you, Mandy, and thank you all for joining us. This could not be more timely, and that is our intent. We are here, the Cobb Chamber, to help you every step of the way with resources, with advocacy. We are your champion, and we're here, and we want to help all of us recover from this. And so that's why today we provided part 2 of this business recovery seminar webinar. We're going to do this every Tuesday, at least during this time period, and focus on a different topic for business recovery. Next week, we're going to dive into HR, and weeks following, we'll continue to have the most timely information for you. So let us know if there's anything you'd like to hear that will help your business through this time. Also, every Wednesday, starting last week through mid-May, we have partnered with KSU for a leadership series. And again, just like these Tuesday business recovery webinars, these are free for you and any business that wants to join, which is amazing that KSU has offered their award-winning executive programs for us as leaders to be able to have access to that. They have been so beneficial. I know I really enjoyed last week, got a lot out of it, and this is so helpful for all of us to lead, especially in crisis, as we've had to change a lot of ways we're doing things, and so I hope you continue to find this beneficial. We're going to also continue to have many other specific webinars that help different groups, such as the retail group we brought together on Friday for idea sharing. And then over the next month, we're going to be launching a lot of our chamber events virtually to make sure we're meeting your needs, giving you the resources, giving you the connections in every direction. Also, if you've not been receiving our chamber communications, please let us know so we can add you to our daily email list with resources. But the thing I want to make sure you pay attention to the most is our website COVID-19 resource page. We update it daily, add resources from experts like today that are going to help you navigate all the many complexities and challenges, whether it is the federal stimulus or Department of Labor, or how to have effective teleworking, or jobs that are available for those who've lost jobs. My personal favorite from the county, thanks to Cobb County government, there's a special hub where you can tell what's available at grocery stores down to toilet paper. So I know that has been very helpful for a lot of people. So we're going to keep adding to those, whether it's small business toolkits, you name it, it's all there. Again, cobbchamber.org. Please share that resource with others. We want to continue to be a resource for this community. And then also, we're going to keep partnering with many organizations throughout the community, whether it's Cobb Travel and Tourism for workforce matching, or many others for our launch of Cobb Shops to Go, that you can post your deals, that whether they're online or to-go orders. We want to continue to support you through this. And then also, we launched just a few weeks ago Operation Meal Plan in partnership with Cobb Community Foundation, Center for Family Resources, and our nonprofits. And this is already helping more than 20 restaurants keep their employees employed, and also serving a great need for providing food to nonprofits who need them, because many people can't volunteer and make food during this time. Already we've had close to 25 different nonprofits benefit from this, more than 2,000 meals served. And so I can't thank you all enough for many people who've donated to this fund through Cobb Community Foundation to help us execute Operation Meal Plan. So we're going to keep working with our many partners to help out in every way. But one of the things we did as a chamber, our chairman, John Loud, our chair-elect, Britt Fleck, and I formed an economic recovery task force to focus both on the short-term and the long-term needs so that we can make sure we better understand all the needs for every industry and how we can tackle them and how we can help you. So please help us as part of that process to fill out our business survey. Tell us in more detail ways we can help your business in this time. And we're going to be focusing on working together to overcome. I could not be more proud to live in Cobb County because we are an amazing community where everyone is coming together to help each other to overcome this. And we are going to not only get through this, we're going to overcome this. So no, we're here for you. I'm here for you. Don't hesitate to reach out to me or any of us during this time if we can help you. So I hope you enjoyed today's webinar, and I know you'll find it beneficial with all of our great experts today. So with that, I will turn it to our chairman, John Loud, who's also the president and CEO of Loud Security, and he is going to moderate our panel. Oh, John, you're on mute. Thank you all.
How about that? Here we go. Well, thank you very much. Thank you, Sharon, for the updates there. And thank you all so much for taking the time out of your day to join us for our virtual seat at the table here. And the Chamber announced our new logo last year, showing that we have a seat at the table. Well, in these environments, we've kind of modified, and I appreciate the 500 plus that signed up last week and almost similar this week. I assure you, you will have significant impact on what you're going to get from our panelists today. When you see the information that we've kind of briefed yesterday a little bit, and as we've continued each hour updating as the government's changing so much to keep you abreast as to what's going on. Look, the Cobb Chamber has been here for many years. It's here for you now. It's going to be here for you after that. We invite you to continually have that seat at the table. And as Sharon just said so clearly, with all the ongoing program, as chairman of the board, I'm going to commit this to you. Just as I do with my customers at Loud Security, I give out my cell phone number for 10,000 plus customers. At the end of this, my cell number, my email, if you've got a question or a problem or a challenge, what the Chamber is so great at bringing the government resources, the banking resources, the human resources for businesses, all together to be able to help us navigate these tough, challenging times. Look, here's a simple thing. My cell number, you have a challenge and you need some connectivity to get some piece of that puzzle to help you through it, call me directly. 678-300-9785 is my cell. I will find those resources in our community through Sharon, the Chamber, and the others that are raising their hands to help each and every one of you businesses out there. I know there's scary days, there's uncertainty that lie ahead, but what you're going to get in today's seminar, you're going to find some great insights. So what I want to do, we've got a special guest I want to introduce to us, had a great short conversation with Cobb County Commission Chairman Mike Boyce this morning. So I've asked Chairman Boyce to join us. Chairman Boyce spent 30 years in the Marines. He got elected as Cobb County Commission Chairman back in 2016. The unique thing is, look, he has spent time over in Desert Storm. He has spent time at Desert Shield over in Iraq. He also got to spend time with Operations Restore Hope in Somalia. And at this time, I'd ask Chairman Boyce if he could bring us an update on Operation COVID-19 Cobb County base. Off to you, Chairman Boyce.
Hey, well, thank you, John. Good morning to everybody. It's good to have you there. I just first of all, I want to extend a message to Data Johnson. I see that he's on the list here. It's good to see he's back in full recovery. It's a wonderful, wonderful news that I heard yesterday. So Data, glad to see you're getting back in full strength. Just want to get you kind of a brief update where we are. Your Cobb County government is running in the background. It's another example of you don't know we're here because we're doing our job. But there are a number of things that I think you need to be made aware of to help you in your decisions, because as John and Sharon both said, the biggest challenge we have right now is uncertainty. It's the unknown. I stay in regular contact with so many different people. Dr. Memark of Clarity is our subject matter expert for public health issues, and she's been a big influence, has been her team, as to what we did through the shelter in place and modification made last week. We're now entering our third week of sheltering in place. As you all know, it takes about 2 weeks to see what impact all these measures have, and we're about to find out the consequence of our actions here 2 weeks ago. But I'm very encouraged by the numbers. The thing you need to be most important about for this week, though, is there's going to be more and more testing here in the state and in the county. So the numbers are naturally going to go up. I think that we all know, watching the Surgeon General of the United States, I just repeat his message. We're all dug in right now. We're all on the defensive. We're all waiting for the wave of the peak this week to see what those numbers are. But the bottom line here is I want to thank every one of you that have done your part to implement the social distancing that is so important to, this is really our only tool against the COVID-19. We don't have a vaccine, so we can't go on the offensive yet. But those measures you're taking, I'm so impressed by how quickly companies like Publix, and I saw Walmart yesterday say they're going to start limiting the number of people in their stores. How these big chains have all come together to start doing things collectively in unison to push the message of let's maintain the social distancing and also the shelter in place. There's a couple of things that I want to also emphasize. Today, 11 o'clock, I'll be happy to leave a little bit early here. I work with Wellstar. They have a weekly update about what's going on, but the good news is that Candace Saunders, the CEO of Wellstar, has assured all of us that there's still plenty of capacity at the hospitals so we can meet this wave that we're expecting. But the variable is the nursing homes. One nursing home can take us from a situation being relative positive about where we are in the future to like we're getting very, very close to overwhelming our capacity here. So I'm very, Dr. Memark is focusing very, very closely on those nursing homes because those are the ones that once the virus gets in there, it spreads rapidly. And as we all know, watching the MDJ and its daily update about the number of people that have passed, it is still, in fact, the older people that are the most susceptible to this virus, and they go very quickly. So all of us have a hand in making sure that we get our way through the future. The last thing I want to say here is that I've been talking regularly with Sharon Mason, John Loud, Holly Quinlan, General Carden. I'm trying to get all the factors here together to help us work together to help your program. We cannot do this alone. And I got to underline what John just said here. We've been here before, we're here today, and we're going to be here tomorrow. And we're going to be here tomorrow because all of us understand the importance of working together. So anything that we can do at county, all right, call us. We have the Emergency Operations Center in place. They've been up now for almost 2 weeks. They're taking calls regularly. Go to cobbcounty.org. We have forms on there for you if you have any issues that you want us to address. Or it seems like everybody has my email and phone number now. So I'm going to give it out right now. If for those 10 people in this county don't have it, it is 770-702-4412. Call me, and I'm sure we'll get together and work through this thing. So John, Sharon, thank you for all you're doing here, and I look forward to this information that you're going to pass on this morning.
Thank you so much, Chairman Boyce. I know the other panelists are now getting nervous since we've got our cell numbers and our email addresses out there. But, you know, as we've talked about this year, together we can. As we shared at annual dinner and some of the marquee Mondays, talking about together we can, you know, seize opportunities and the great things that come to Cobb, and together we can take these challenges in tough times like this. Look, we talked about small business focus, workforce development, and military. I mean, look at the examples of what's going on out there between what's happened at Dobbins. But let me remind every business, before COVID-19 even became part of our life, the biggest factor most of us were facing were workforce development challenges. And today is the day you've got to start thinking about reopening that business and what you're going to do about your workforce. And as we get into, I'm going to start off with Jeff Facito here in just a minute. When we start talking about the resources here that the government is starting to bring to you from these stimulus offerings, these are going to be the resources for you to see the light at the end of the tunnel so that financially you can see how you can reinforce that workforce. So you start thinking about what's it going to be like to open those doors. And remember, lean on us at the chamber if there's questions or things in between. But in the short term, continue to put questions over in the chat area. But at this time, I want to throw things over to Jeff Facito, who's the partner in charge at the Atlanta office. He's a graduate for the University of Georgia, the J.M. Tull School of Accounting, graduate from there. He specializes in providing audit and tax services for profit and nonprofit organizations. He served as our Cobb County Chamber Finance Committee chairman and has done an outstanding job for the last 5 years. So I'd like to turn things over to Mr. Jeff Facito. Thank you, Jeff.
All right, thank you, John. Good morning, everybody. We're going to give you some information to start with, and I'm also going to go over some things that we've been trying to answer over the last week and give you some practical solutions, hopefully, to some of the questions that you might have. And I've kind of made a list of items that have come up with our clients that you might have similar questions to. And one caveat I would like to give on all of this is this law was passed by the House about a week and a half ago now. And there's been a process that occurred when the bill was being written, when it went to the president, and the president didn't like a few things about it. And then after that, there's been some interpretations and an interim final rule. And it's been a process that has moved so quickly that it's caused some inaccuracies in some of the information that we have right now. And it's something that almost evolves every day. Like we're getting more information from the SBA almost every day now. We're getting different interpretations from various people. And you have to keep in mind that something that we tell you today could be different tomorrow possibly. And there's a lot of examples of that already. So just keep that in mind. And also, if you go to the treasury.gov/CARES website, that is a repository of most of everything that you would want to know about this P3 program. We call it P3, so it's the payroll protection program that we're talking about there, or PPP is what a lot of people call it. And it's the primary source for you as a borrower if you're just wanting to answer some questions. And in general, if you don't see the answers there and you don't see the answers on the actual application, there probably is not an answer right now. And then what I'm telling our clients is that you really need to be talking to your banker. And that's why we have all the bankers, on this session. And ultimately, we can read these rules ourselves as borrowers. We can look at the information on the treasury.gov/CARES website. We can go to the SBA website and read what they have to say there. We can go to the application and read that, but ultimately it's up to the bankers to implement this. And they might tell you something that's a little bit different than your interpretation. And there's a good chance that some of the things I'm just going to briefly go over here, the bankers in this call are going to think something different about. And we have seen so many varying interpretations from the major banks and from small banks. And honestly, this whole thing is moving so quickly that even the major banks have been putting out information that is really not accurate. And they've had to go back onto their websites and make corrections. And some of those can be fairly significant at times. So just keep in mind, that's kind of the environment we're in. It's a very unusual environment. Everybody keeps on saying, this is something we've never seen before. And we just had to kind of roll with the changes and do the best we can, and hopefully this money will get out there quickly. Okay, so what I'm going to do here is I'm going to share my screen and we're going to go over a presentation. Okay, first of all, just in general, we have 3 programs, and item 3 is something that you might not have heard about very much yet because we're just getting information on it. But you have the EIDL program, the Economic Injury and Disaster Loan Program. So that's been out much longer than the PPP program. So, and I noticed on the comments that several of you have applied for this assistance. Then you've got the Payroll Protection Program, the PPP program, which is mostly what we're talking about today. And then something that you're going to start hearing about more is loans for mid-sized businesses. So they're calling it the Main Street Lending Facility. And what's interesting about this is it's actually money that's coming from the Federal Reserve. And the Federal Reserve, through this act that was passed, has about $454 billion that's been allocated that they're going to be lending out in different ways. And the loan for mid-sized business program is going to cover businesses with 10 million to 2 billion in revenue. And where the Paycheck Protection Program and the EIDL programs are for smaller businesses. So you'll hear pretty soon much more about that. There's just not a lot of information out there about that yet, except for some general information we're going to cover here in a minute. Now, the EIDL program, as I mentioned, I know that a lot of you have already applied for this. And I'll just answer a question that was very uncertain, and it's more certain now. Yes, you can apply for the EIDL program and the PPP loan program. And the big caveat is you can't use the proceeds for the same thing. And you also, if you have an EIDL loan currently, you will have an opportunity to roll that into your PPP loan if you apply for the PPP loan. You can apply for one or the other. And they're really, I've attended a number of webinars now and been reading everything I can about these programs, and they're really geared for different purposes. The PPP program is more focused on money that you would receive and then spend over an 8-week period of time to get your employees back to work and to get you through the next 8 weeks. The EIDL program is a longer term program which could help a business that's going to struggle after we hopefully get back to work, in the next couple of months. So you might have a need in the late fall or early winter that's been caused from this virus, where you would need some funding to kind of get you through that. And that's more this EIDL program is more long term. So for this program, and this is true for all of the programs that we're talking about, you basically have to be able to say that you need this assistance in order to meet your financial obligations as a result of the COVID-19 crisis. And you basically have to be able to make a case that there's economic uncertainty and these loans are necessary to support your ongoing operations. So we get that question a lot about, should I apply or should I not apply? Am I eligible or am I not eligible? And that's the first thing you have to ask yourself. Are you under some economic uncertainty, or do you need this money to support financial obligations? Another way to put that, and this might be oversimplifying it, but I'm telling clients that you really might have had a decline in revenue or expecting a decline in revenue, or there's uncertainties that could cause a decline in revenue, or you might have an increase in expenses due to various uncertainties or something that's occurred already. We do a lot of nursing home work, and Chairman Boyce was talking about what could occur if there was an outbreak in a nursing facility. And I can tell you that nursing facilities are experiencing significant increases in cost to try to avoid an outbreak. And then when they get a few residents that unfortunately have gotten the virus, a lot of those are staying in the facility now, and they're needing to create areas in the facility, which are segregated from the rest of the facility and handle things differently. So there's a lot of cost there. And these loan programs are designed to cover that cost and get the facilities through this. The loan amount in this program is up to $2 million for working capital and ordinary expenditures. And they have to be tied into the economic injury that you would have received incurred through the COVID-19 virus. Rates 3.75%, 2.75 for nonprofits. And one thing that's important on the screen is you apply directly with the SBA. So this is a direct SBA program. You do not apply through your bankers with this particular program. And another item that's not on the screen, but you'll see it on a future screen, when you apply for this, they will give you a $10,000 advance. And even if you do not end up qualifying under this loan, that advance is forgiven. So, and their goal was to provide that $10,000 advance in a period of 72 hours. And I've actually been in contact with a few clients, and we've been monitoring the 72-hour goal. And recently they have not been meeting that 72-hour goal, but we're hoping that it will be close to that. So it's nice that they're providing this advance in case, there's some sort of immediate cash need, that where you can't wait for the loan program to come through. All right, so this is the big one that we're talking about mostly today, the PPP program. And eligibility, 500 employees or less. And then if you have more than 500 employees, you can meet a size standard based on the NAICS codes. And on the SBA website, you can type in your NAICS code, and it will tell you what that size standard is. There's certain exceptions for having multiple locations. And if you meet these exceptions, like if you're a franchise restaurant or something like that, you can have multiple locations and then treat each location separately. This covers sole proprietors, independent contractors, self-employed individuals. And one thing to point out for self-employed and independent contractors, the application time is April the 10th. For everybody else, the application period began this past Friday. And that doesn't necessarily mean that your financial institution was ready this past Friday for obvious reasons. It's how fast all this is moving, but that was the initial application date. The loan amount is 2.5 times a borrower's monthly payroll cost, and it's cut off at $100,000 or $10 million in total. So it's cut off at $100,000 per employee in regard to salary. The rate used to be 0.5%. It is now 1%, so it went up a little bit with this most recent interim final rule that we got. And payments of principal and interest can be deferred for up to 6 months. And the big deal is the loans are forgivable under certain circumstances, and we're going to cover that in a second. So I want to move through this quickly, and because I want to make sure everybody has the time that they need to talk about this, but I'm going to give you a few pointers in regard to this loan in case you've run into these situations. Okay, there's attribution rules. So if you go to the treasury.gov/CARES website, you can read about the attribution rules. So if you have multiple entities that are controlled by one group or managed by one group, look at the attribution rules, because it could be combined, you're too big, you're over the 500 employees, and you wouldn't qualify for this. Number of employees, it means the average number of employees, part-time and full-time. They don't differentiate between part-time and full-time. And you're taking the average number of employees for 2019. If you're a nonprofit, there are certain things that you have to certify in your application, and most of our clients have been adopting a board resolution. And there's lots of examples on the internet. If you just type in nonprofit board resolution format, you can pull up a simple example where you get your board to certify the items that are on this application. At the moment, C6s are not eligible for this program. I saw something from the Georgia Chamber of Commerce where they are lobbying to include C6s, and I can tell you a million examples why C6s should be included, and we're hoping that that does become a change in the future, but at the moment, C6s are excluded. The $100,000 limitation. This is something that's been debated significantly. At the moment, the interpretation is that you take somebody's salary for 2019 for the entire year, cut it off at $100,000, and then you add on to that the benefits, and then that total is what you're eligible for. So the debate was, is the $100,000 cutoff include benefits and include insurance, and you add that to the salary, and that's what you get. So at the moment, most bankers and most everything I'm reading is interpreting it to cut off at $100,000 a salary, and then you add benefits on top of that. So in effect, for one employee, you'll get more than $100,000 that you can borrow. Let's see, there's an FTE reduction, and we don't go into the details of that, but if you end up having less full-time employees over the 8-week period after you take out this loan than what you had in 2019 for the same period of time, it will reduce the amount that can be forgiven. A lot of people have related party rent. There's no information on that at the moment, but we're thinking it's reasonable that if it's arm's length, that will be part of the forgiveness, but we have more to see on that to see how that's going to be interpreted. Okay, this is a big item, and this is clarified in the interim final rule that came out. I think it came out on Friday or Saturday this past week. In this computation, contractors are not in the computation. And the reason for that is contractors can actually apply for this program themselves. So if you're going through your salary computations, you take independent contractors out. Another question we've had a lot is, do you have to have an audit? No, you do not have to have an audit. And lastly, a big deal that there's still uncertainty about in regard to this program. If you read the language of the program, it says that for the forgivable portion, they might exclude federal withholding that's paid in the 8-week period of time and employer and employee FICA that is paid in the 8-week period of time. And if they were to do that, then in effect, all of the proceeds from this program would not be forgiven, and it would be a big deal. And we think ourselves that there was problems in the way that it was worded, and problems in the way that this was being thought about and written, and we're hoping that this ends up getting changed. And one thing that was interesting, so Marco Rubio made a comment the other day, and I'm just going to read that to you because this is probably the biggest thing that's outstanding, in my opinion, in regard to this. And he said, he tweeted, "Fifth issue is that in calculating average monthly payroll to determine PPP loans amount, we need to make clear our intent when writing the bill that gross payroll would be applied to calculation to ensure federal tax withholding and FICA burden isn't on small business." So Marco Rubio there is addressing very specifically this concern that if the wording doesn't get changed, or if there's not a clarification on this, the small businesses could be out this payroll tax and federal withholding when they apply for their forgiveness. So we're hoping that is going to change. Another comment I'll make that, and I actually pulled up the quote on this. So a lot of the panic, I would have to say, that we're seeing has to do with everybody thinking that this money's going to run out. And in the wording that we've gotten in the interim final rule and then in other SBA guidance, they've been clear to point out that at the moment there's $349 billion that's been allocated to this program, and that is all at the moment. So on Wednesday in the press conference, Treasury Secretary Steven Mnuchin said, and I'll just read this, he said Wednesday that he'll ask Congress for more money to sustain U.S. small businesses during the pandemic if the White House doles out all of the $350 billion for this loan pool, this PPP program. And he said, one of the things I've heard is that small business program is going to be so popular, we're going to run out of the $350 billion. If that's the case, I can assure you that will be at the top of the list for me to go back to Congress on. It's a huge bipartisan support. It has huge bipartisan support, and we want to protect small business. So that's a big deal. We don't know if that's going to happen or not, but if you've got the Treasury Secretary saying that, I think that hopefully gives us a little bit of comfort that if this money runs out, they're going to add more to the pool. So this next screen runs through eligibility, and it's basically what we just talked about. If you're a 501c3 or a business, small business, less than 500 employees, or if you meet NAICS revenue thresholds, you can apply for this. Okay, this is the big thing, and you're going to hear the bankers talking about this. So you've got to think about this in two ways. You're first applying for the loan. It's based on the salary calculation. It's based on taking the wages cut off at $100,000 and adding a few things to that, in particular benefits, and that's what you're eligible to borrow. So even though you're eligible to borrow that amount and you receive that amount, it doesn't necessarily mean that you're going to be forgiven that amount. And certain costs are eligible to be forgiven under this program. And after you go through your 8-week period of time incurring costs in these particular areas, you'll be submitting this information to your banker and applying for forgiveness. And if you don't spend the money for these intended purposes, then you will owe that money back, and it'll be due with a loan period of 2 years. And there's a couple of caveats. 25% of the loan proceeds is the cap on what can be spent on things other than payroll. So those other items that can be spent include utilities, insurance, utilities, lease expense, and interest payments. And everything else has to be spent on the payroll. So you've got to be careful about that. And let's say you don't meet that 25%. All it means is that you have to pay it back. So we're recommending to our clients that you take the loan proceeds, put it in a segregated account, keep track of how you're spending it so that you can prove to your banker how these proceeds were dispersed. Keep the support for the payroll cost and the other items, the lease expense and your utilities and your interest payments on mortgages that qualify for forgiveness, and then apply for forgiveness. But once again, if you don't meet this threshold is 75% going towards your payroll cost, the difference, will not be forgiven. And then remember, like we mentioned before, that there's FTE calculations where you had to maintain certain numbers of employees based on the same time period in the previous year. We won't spend really much time on this because this is something that you're going to hear a lot more about in the future, but we've got this Main Street lending facility coming out, and here we're capturing the companies that are 500 to 10,000 employees. And once again, we're going to be hearing a lot more about that. And these screens have a lot more information about how you qualify. And once again, it has to be uncertainty regarding economic conditions. They're talking about how the money has to be used. And there's certain caveats to be qualifying as a recipient, like you can't pay dividends over this period of time. You can't outsource jobs, to offshore. And there's other caveats related to this. But once again, we'll be hearing much more about this. So hopefully that gives everybody kind of a flavor of what's out there. And I'm going to turn this back over to our panelists.
All right, Jeff, thank you so very much. And I know I see many questions starting to come in. And I want to encourage you folks, as you come up with questions pertaining to your situation, we're going to turn to a few bankers in our community right now. And after that, we're going to start to answer some of these questions that are coming through the chat. So if you will, click on chat, pose your question to all panelists, and we're going to be able to hit on several of those in just a minute. First, I'd like to turn to Terry DeWitt. Terry's the community president at Center State Bank. He's been so entrenched and involved in our community with so many nonprofits, such as the Rotary Club of Marietta. He also serves on the board of directors for the Marietta School Foundation, Must Ministries. He's a past chairman of the Cobb Collaborative. And in 2016, when there was not a pandemic, Terry was chairman of the Cobb Chamber of Commerce. Thank you, Terry. He also currently serves on the board for the Cobb Chamber, and he's the chairman of the Cobb Chamber Foundation. He's also got his accounting degree from the University of Alabama. You've heard about that in the news many times through the years, but at this point, I want to get a quick update from Terry DeWitt with Center State Bank. Thank you, Terry.
Thanks, John. Good morning, everybody. Appreciate everybody being on the call this morning. This CARES Act is an amazing bipartisan stimulus bill that we're being asked as the banking community to play a vital role in facilitating payments to small business. And I think we have to sort of step back and take a 30,000-foot view of this. It's called the Paycheck Protection Program. And so the objective is to keep small business workers employed through this short period of time as we shelter in place and hopefully be able to come out on the other side of it. I would add a fourth P to the Paycheck Protection Program, and that would be patience. This is a huge undertaking. I would ask you to think of your business and what would happen if all of a sudden every one of your customers decided they wanted your product or service today. And that's really what we're working with as an industry. For example, if I'm a lawn care provider and I provide lawn care services over the course of a couple of weeks to a large customer base, and they all call up and say, I want my lawn cut on Friday. That would be very hard for any business to pull off. And so I know that doesn't ease everybody's frustrations about the uncertainties here, but I can tell you at Center State, we've been working with our customers and helping them get information together that they're going to need. We've been working for the past week developing a back office system that once we start accepting applications today through 2 separate channels, we'll be able to process quickly and efficiently. And so while we've not formally started accepting applications, we should start doing that later today. And a lot of the groundwork's been done to get those loaded very quickly. We are having to prioritize our client base. We're having to lean into the relationships of folks that have been doing business with our bank through the years. And I know there's reports of banks, not being able to service their customers because of regulatory limitations and those kind of things. we want to help those folks, but first we're going to take care of our existing customers who have their operating accounts and their loan accounts with us as small businesses, and then we'll move towards working to the other ones. I do want to talk about forgiveness. Jeff talked a little bit about forgiveness. One of the things is we've still not seen a note and loan agreement from the federal government as to how this should be done. If you're a borrower, I don't think I would recommend that you sign a note with a bank unless all the forgiveness rules are spelled out. And quite honestly, we've spent a lot of time talking about with the SBA how to calculate a loan amount, but they've not issued any guidance in detail about how the forgiveness is going to be calculated. There's a lot of onus on you as the business owner as to calculating these amounts. And while there's no guarantee on these loans and there's no collateral being given, there are sentences in the Treasury regs that talk about there could be potential liability to the owner or the operator of the business if they do not use these funds for acceptable purposes. So I guess I would end my opening comments by saying, it sounds like the PPP is a great program. Talk to your banker, talk to your CPA, talk to your attorney or other business advisors to figure out what the best program might be for you to go through, or potentially multiple programs. So also, before we turn it back over to John, other bankers, I do want us to make sure that between the three bankers on the call that we do cover the other things outside of the PPP program today, such as all banks are working on deferments and forbearances for existing loan customers. And then another key thing that many people are forgetting is if you already have an existing 7A loan or a 504 debenture, the SBA is making those payments for you for the next 6 months. So, I mean, there's a lot of other things being done for small business outside of this PPP program. So, John, I'll turn it back over to you and let Clark and Chris move forward and can jump back in to help answer questions.
All right. Thank you so much, Terry. Greatly appreciate that. I'm going to turn it right over quickly to Clark Hungerford. Clark's been the president and chief credit officer of Vinings Bank since its beginning back about 14 years ago. But don't let that kid you, because he's got over 44 years of experience in the banking industry, mostly in helping small businesses, and community banking has been that focus. He's a graduate of Auburn University, a BS in economics, and an MBA from Georgia State University. He currently serves on the board of directors of the Community Bankers Association of Georgia. And just like Terry, very community engaged between Marietta Kiwanis Leadership Cobb programs for many years now, also serves on Kennesaw State University Foundation, and he's the chairman of the Development Authority of Cobb County. Over to you, Sir Clark. Thank you for joining us.
Thank you, John. Can y'all hear me? I'm getting a message. Okay. Appreciate it, John. Appreciate the opportunity to be here with the people of Cobb County. The one thing that I would emphasize from what Terry just said is patience. Everybody needs to just take a deep breath, step back. This thing is very traumatic, how we're having to react to it. But as far as the PPP program, it's going to be here for a while. There is a deadline of having to spend the money by June 30th, but everybody just needs to relax, take a deep breath, get their information together, and get it into their bank for the application. Also, be a little conservative. Terry was right. The forgiveness part of this is going to be very important, and we don't have the guidelines yet on that to be able to substantiate what it'll be. And it'll be up to each business owner to be able to provide exactly how they have spent this money. So having a separate account is a good idea, so you have it all in one place to be able to go get your canceled checks and your ACHs, going to the payroll company. As the program is called, it's the Paycheck Protection Act. The majority of this, over 70% of it, needs to be to employees that you have at the same level or number of employees you had before this happened on February 15th that you will have going forward. So if you have that in the payroll costs, fringe benefit cost, insurance, retirement benefits, those sort of things, if you're covering it with that, then you should be eligible for forgiveness at the end of the program. I can't guarantee you that because we haven't seen everything yet. But I would tell you, don't get over your skis and try to get every penny you can. I would be conservative because while this will be forgiven at some point, if you run into expenses that don't get covered, let's say you only use 50% of this for payroll and you use the other 50% for other things, you will have to pay that amount back. And understand that the length of the loan at this point is 2 years. Well, that 2 years starts from the time you get the money. And then it goes from there. You got 6 months, probably deferment until it probably gets resolved and you apply for the forgiveness. But then that only leaves you 18 months to pay that balance back. So be conservative in what you're doing. Be judicious in how you use the funds, because if used properly, then you end up with a forgiveness at the end. And the nice thing about it is that if it is forgiven, there are no income tax considerations. Usually forgiveness of debt carries an income tax burden on it, but according to the way the CARES Act was written, you do not have that. So the main things to remember is that if you've got less than 500 employees, and that's total head count, not FTE, but total head count, you can only count incomes up to 100,000. If somebody makes 150, you can only count up to 100,000. You don't get the other 50 in your calculation. You got 8 weeks to spend this money. So when you get it, you've got until June 30th to spend it and then apply for the forgiveness part of it. And, you know, there are other programs out there, the EIDL program. You can apply for both, but if you get the EIDL program or you get the $10,000 grant, $10,000 grant, that comes off of what will be forgiven by the PPP program. So there are a lot of twists and turns. The other thing I want to kind of go with is we started trying to process these applications yesterday, and the SBA loan system, E-Tran, you may have heard of, crashed a couple of times during the day. It is an overload. It's kind of like, if y'all remember Snowgeddon that we all went through a few years ago, when everybody gets out on the road at the same time, you can't get it through. That's what's happening with this system right now. So there's fits and starts, and as we kind of elongate this application program and get it into a good rhythm, these loans should be processed with authorization numbers. And then if we can get a acceptable note from the Treasury or SBA or combined, whoever's putting it together, that we can ask lenders to sign, then we can move this program forward. But I would be like Terry. I would not sign a note that I didn't know what all the, the I's that need to be dotted and T's to be crossed. So I would not encourage you to be in a big haste to get this done till you know exactly what you're getting yourself into.
All right. Thank you so much, Clark. I appreciate
There's
that.
a lot more, but I'll leave it up to the rest to cover and we can answer questions.
Fantastic. I greatly appreciate it. And we'll be back to you very shortly because I've got a few questions coming right to you. I want to throw it over to Chris Gruen. Chris Gruen is the Senior Vice President of Pinnacle Financial Partners. He's working in the banking industry for 30 plus years, mostly on solutions for small and medium-sized businesses, graduate of Auburn University. Chris also is heavily involved in the community, currently serves on the board of directors for Junior Achievement of Georgia, Cobb Community Foundation, Blue Devil Lacrosse, the Extension Advisory Board of Coles College of Business, Kennesaw State University. He's also a leadership team of Marietta Community Church. At this point, Chris, can you give us an update? Chris,
is that better?
There we go.
Okay, we're on now. Yeah, I would just, as far as what I'll add to what the other bankers have said is, there's already plans for another round of funding for this program. I saw this morning, I think it was on Bloomberg, that they're already talking about another $1 trillion. They know that 350 billion is not going to be enough. So to echo the patient's request, just know that the SBA normally processes about 60,000 applications a year for about a total of $30 billion. And we're talking about something that's 10 times that size. So patience is required. The key thing is just to work with your bank, get your application in the queue, and they will get worked as they come up in the pipeline. But I do think that we all just need to take a deep breath, and we're all learning as we go. We're flying the plane as we're building it. At Pinnacle, we've taken a little more of a conservative approach from the application standpoint. We've got some questions around the payroll expense that Jeff was alluding to. So really the only other thing I would tell folks at this point is to err on the side of caution. Be conservative. You don't want an overhang of unforgivable debt if you can avoid it.
All right, Chris, thank you so much. Let me jump into a first question I've got. And this, Jeff or Terry, you guys see if you guys can take a stab at this one. What are some of the potential unintended consequences 2 years from now when people are repaying? I think Clark covered that a little bit. Terry, you brought it up originally by making sure that you understand the covenants of this loan and what is going to be forgiven. But are there some other unintended consequences that maybe some folks should be thinking about today and not wait till they get 18 months in and go, oh no?
Well, I'll use an example of an industry that's been extremely hard hit, the hospitality industry, whether it's a hotel, a restaurant, a bar. Obviously, the calculation of the loan amount is a backwards looking thing as to what your payroll costs were over the past year. But you may have already laid off all of those employees. And I'm going to sort of flip this question to Jeff. That's one thing that we're uncertain about. If you've laid these employees off and you apply for this money, you're eligible for it. But then, if you're not able to spend it on those, acceptable uses, what good is it doing you? And I know there's some language that talks about hiring employees back by June 30th. But how that factors into the forgiveness calculation is a very interesting thing to me that I don't think we have answers for yet. So, that's the risk here, I think, is really thinking through, while this, once again, is a loan without any personal guarantees for your business, without any collateral requirements. I mean, you're hopeful that your business is going to be back up and running in a period of time. And you don't want to do something that and use proceeds to get you through this period that ends up having the government looking to your business to try to figure out how to recoup those funds at some point in time. So Jeff, could you?
Terry, I'll comment on if you've laid off your employees. Yes, you can bring the employees back, and then those salaries that you're paying over the 8-week period of time will qualify, for this forgiveness. And but there's, in my opinion, it depends on your personal circumstances, but like Terry's mentioning, you do have to consider the other options. And one thing that makes this a little bit more complicated now, with the unemployment benefit being $600 added on to the previous Georgia balance of $330 at the maximum, you could have somebody collecting, $930 a week of unemployment. And that could be a better option, versus getting this PPP loan and then using the proceeds to actually hire them back if they are not working. So you just have to consider things like that. It could be very different depending on the circumstances.
Yeah, and once again, the economic injury disaster loan could be a greater source of funding for your overall, loss of revenue and those kind of things, particularly if you're not a payroll heavy company and how you're doing things. So, John, I know you're going to ask more questions. People have asked about the economic injury development thing, and I think one thing I did hear yesterday is the $10,000 grant is the key word there is up to $10,000. I can't remember where I heard this, but one person mentioned that their grant was only $1,250 of what they were being estimated as the grant portion of their EIDL loan from the SBA. And once again, unfortunately, us bankers, that's a process that the individual borrowers work directly with the SBA website, and we're not involved in that program. So.
I think some of the things I'm certainly hearing is proceed with caution. I talked to a business owner this morning, and her application, she came in with the EIDL and she did not submit for the full 10,000 either. So there is a formula there, and as Clark and Terry and others have kind of said along the way, you know, don't try to just go for it because it's there. Do what's going to be the right match for you, so you're not stuck a few months or a year from now looking like, oh no. We're definitely getting a lot of questions about, hey, I applied last week. So last week, let's say, is before Friday. You know, number one is Terry offered to add the additional P for patients, but what do they do? Where can they go check on the status? Should they reapply? Where do they go from here?
Well, I'll take that on the EIDL program, as Terry said. That's all between the applicant and the SBA. We don't have any access to that information, so you'll have to look at the SBA and get that information. On the PPP loan, we're just figuring out. We're getting authorization numbers, and then we're just waiting on the note document to be able to do it. So we're really, once we get that, we got the authorization to do it. But until we know exactly what the terms and conditions should be, we're not executing any of those. And we're really doing that to try to protect our customers.
You know, you can only apply for the PPP once. So, you know, I've heard of people going to multiple financial institutions and applying it in multiple places. What I think is going to happen at that point in time is that whoever, you know, once your application is formally received by your financial institution and checked and verified, the financial institution, I think Clark mentioned this before, has to go to an SBA website called eTran to register the loan as a guaranteed loan. And they start with your tax ID number. So, you know, quite honestly, I think whoever gets there first as far as registering that loan is who you're going to ultimately have to deal with if you've done it on multiple sites. But if you're working with your relationship banker, you know, you just got to stay in contact with them and understand that, you know, they're processing one of these for all of their clients, and every other relationship banker in the bank's doing the same thing for their clients. So it's just a bottleneck that we're going to have to work through. So,
yeah. Jeff, this one to you guys or anybody else. So someone's here, there's a home-based business, sole proprietor. They claim 15% of their home utilities, internet, phones, and everything. Can they submit for all that under PPP?
Okay, so if there's one area that is extremely lacking in the guidance that we have so far is how self-employed individuals are going to be treated. And we got a little bit of additional guidance in this interim rule that came out. And what they're saying now for the application, you're going to be taking 2019, and what you're going to be eligible for is your self-employment income. So your self-employment income is your income less any expenses for that business. And then the net balance being your self-employment income is what you can apply for. So if those are valid expenses that are being noted in this question, those reduce your self-employment income. And then the net amount is the amount of the loan that you'll receive. So, and once again, you have to be careful about how you think about this, because I get that question a lot, questions like that. There's two processes happening here. You're getting a loan, and the loan has to be based on what they're telling us it's going to be based on. And then the second part of this process is you can be forgiven for a portion of that loan if you spend the money on these items that they're telling us you can spend the money on. So for the loan, at the moment, they're saying it's the self-employment income that would be the qualifying portion.
Well, a quick follow-up to that is you've got a lot of sole proprietors out there that do not even pay themselves, right? It all falls down to the bottom dollar for them. So a question really here is, I've traditionally not paid myself. Can I start now paying myself? Or you want to throw in the update for this Friday where they're actually for the first time eligible to be able to go claim unemployment? What's someone's guidance to on that subject?
Yeah, and there's so many questions about this that really we could tell you what we think and what makes sense, but honestly, the guidance is not out there yet. So at the moment, all the guidance that we have is what's eligible for this loan, but what can be forgiven. We're assuming that it would be the self-employment income that you have for this period of time, and then whether you pay it to yourself or not. but we don't really know that.
Okay, there's a provision here when we're signing these affidavits that are basically going to say that we're pledging in general to be buying American. So that's kind of an indefinite pledge when somebody chooses to accept this. Is there any formula as to how they'll regulate that down the road? I know most of the forgiveness is about payroll and so forth. So therefore, that's not about buying American products and services, but how will they look at that down the road?
Any answer from the bankers on that one? That's one of those general, I think their intent is that you buy American, but there's probably not going to be a lot of processes in place to actually verify that in the future, I would assume.
Now, the only thing I know about that is this is only applicable to U.S. citizens. That's the only thing for sure that we know about. The rest of the stuff, as far as filing for reimbursement, that hasn't come out yet. And I don't know how you'll do that and how you'll prove that. I think my guess is it's going to, if you sign an affidavit that you did that, they're going to take you at your word. But that's just my opinion.
Yeah, this sort of goes back to the unintended consequence question earlier. The other thing that I read a little bit about last week, and I've not seen anything else on it to this point, is that if you rehire workers, under this PPP program, you're also committing in another portion of the CARES Act to be able to provide paid leave to those employees, going forward. And I don't know if that's a long-term commitment that they're making or it's a short-term related to the coronavirus. So just another example of the unintended consequences. So, John, I'm seeing lots of questions about the 1099 employees. I mean,
yes.
Once again, 1099 employees, they're going to be eligible to file themselves. You cannot count a 1099 employee on your payroll. The only people that you are paying your employees and paying payroll taxes on those employees are eligible in your payroll calculation. So I know another issue we were dealing with a lot of questions about yesterday, and may or may not be applicable to folks on this call, but many companies, as you know, lease employees through PEOs now, and guidance did come out from the SBA overnight that companies can, if they are using a PEO company, they can count those employees as their employees, and the company that the PEO cannot count any of those employees. So they're not allowing double counting, but that is a good situation that there was a lot of concern about. I lease my employees from a company so that I can get better benefits for them and those kind of things, and those are eligible to be included in payroll.
Terry,
go ahead.
I'm sorry, Terry, I'll add on to your comments, because I was noticing all those questions too about independent contractors. So part of what's going on here, this was not clear, there was some debate about it, significant debate, until this interim final rule came out. So once again, if you go to the treasury.gov/CARES website, you'll see the interim final rule. And if you look at page 11 of the interim final rule, there's a question that says, do independent contractors count as employees for purposes of PPP loan calculations? And the answer is no. Independent contractors have the ability to apply for a PPP loan on their own, so they do not count for purposes of a borrower's PPP loan calculation.
So to be clear then, really, if you're a W-2 and you're going to be on my payroll, you're going to be able to be in my qualification numbers for PPP. If you're not a W-2 employee, then they're going to be able to file either Friday unemployment on their own, or they're going to be able to file for their own loan through one of these programs, correct?
That's correct. And John, one other point, in case some of you had, because honestly, I did not think about this until a couple of days into this. Do not, when you're doing your salary computations, do not just take your 941s, because the 941s are excluding cafeteria benefits like health benefits. It's excluding pension benefits that the employee is making a contribution and it's coming out of their wages. So be careful that you're not using the 941, because it's excluding some of the items that are allowed to be included, for gross salaries.
That's a great point. I did see a question earlier in the scroll that somebody had applied, but their bank did not allow them to put some of their employee benefits in there, and they were asking, can they reapply, or is it they should go back to their bank and say, I've understood now? What's your guidance there?
So what do you guys think about that? I can tell you that, and I saw that question and I pulled up what counts as payroll cost. So payroll cost is employee salaries, commissions or compensation, cash tips, payment for vacation, sick and leave, severance payments, group health benefits, retirement benefits, state and local taxes that were paid. And then it's capped at $100,000 at the salary point, and then you add these benefits on after that as our interpretation. But I wouldn't know. I don't know what you guys think about if somebody's already applied and if that can be changed or not.
Yep. John, this is Chris. I would just say, you need to go with your bank and trust their interpretation. They're trying to protect you as well as them as far as the guarantee or the forgivable amount. There's going to be some different interpretations between organizations. I think if you try to get into the fine tuning and trying to maximize your dollars, you're exposing yourself to debt that you will have to repay. And I would also say, as part of this process, if you go before you apply or submit your package to your banker, show your math, help them work through the application. That will help get it through the pipeline quicker. The less they have to double check, the better. I would also say, in our case, there are certain schedules from a tax standpoint that are required as part of the application, but you don't have to send your whole tax return. That's causing some issues as well, as just trying to get the sheer size of these documents through the pipeline. So show your math, but don't show more than you have to, if that makes sense.
Hey, Clark, could you give us some guidance for businesses that are less than a year old?
Well, I just saw that question pop up, and I'm going to ask Jeff to help me on it. As I understand, and of course, we probably got a lot in Cobb County that started sometime in 2019. The thing is, you have to be in operation by February 15th, 2020 to be eligible for this program. But you've got several that may have opened up in June, July, whatever. As I understand, Jeff, the interpretation is if you don't have a full year of payroll, you use what you've got for January and February and use that as the basis and then determine what your monthly payroll is. Is that pretty much correct?
That is correct. So, so new businesses may use January and February of 2020 to establish your average monthly payroll cost. And then there's another provision that if you have seasonal employees, you can use an average monthly payroll cost that's from the period of February 15th of 2019 through June 30th of 2019.
John, one thing I'd like to kind of reemphasize, and I think Terry and Chris will agree with me, most every bank is going to process these PPP loans. For some reasons, others may not be able to, for size, capital capacity, or whatever. And while I know everybody wants the money today, and probably a lot of people need it today, let me go back to patience and just say, be patient. You may have to check with a couple of lenders because everybody that I know is taking care of their already existing customers first. And I think you would expect that of financial institutions to take care of the people who created their entity. And then as time passes and we get those done, then we'll be out there looking for additional people that we can help. So, this thing about FOMO, fear of missing out, I don't think you have to worry about missing out on this. The problem I know is timing, but just be patient on it.
Thank you with that, Clark. Let me turn to LLCs for a minute. So you've got many times where you've got a business owner that has a company, they own the property separately, so they have an LLC for that separately. The company is renting from the LLC. So what's your guidance on the LLC from EIDL versus, I guess, really not PPP? Can someone shine some light on that equation?
John, I was actually thinking about throwing this out there earlier. I had a client last week who has a condo in Panama City, and Panama City now is not allowing condo owners to lease their condominiums, to vacationers. And he had somebody lined up where he was going to receive $30,000 of rent over the next several months. And so he's going to lose that income, and a condo is just sitting there empty. And he was eligible to apply for the EDIL loan and then receive the $10,000 that he will not have to pay back. Now, he didn't apply for anything in addition to the $10,000 because it has to be paid back, and he's not wanting a loan that he has to pay back. So in that particular case, it was a separate single member LLC, that had the condominium. So single member LLCs are eligible under the EIDL program.
Okay, all right. And again, they'll just do that equation to find out whether it's $10,000 or it's some other, but it's not just the interest, it's actually the full mortgage and taxes and CAM charges or anything of that sort, correct?
As far as the loan eligibility, I think you have to show how you've been injured, with this economic disaster, what your loss is going to be.
Okay. Can someone take on restaurant discussions? I've seen a lot of discussion. I see, obviously, we've addressed the 1099. And just for everybody else out there, we've got about just a little less than 15 minutes to go. We're going to do a hard stop at 12. And if you will get onto the chat area and feel free to pose your question. And we're going to try to get as many or do a follow-up if we miss some along the way. But just get onto the chat. Can someone elaborate further on the restaurants?
One of the big things, and I mentioned this briefly before, the affiliation rules in general do not apply. So if you've got multiple sites, you can treat each one individually for qualifying under the PPP program. Most of everything else that we talked about, there's really no difference. That's where they're drawing a line. They're helping people with the affiliation rules. Let's see if there's something more specific. Rent, John, and you were, I think, asking this before. We don't really have very good guidance right now on the forgiveness aspect of the PPP loan related to rent, especially coming from a related party. And I'm hoping that the guidelines end up being that it has to be arm's length and comparable to what you would have been paying, from a non-related party, and that amount will be forgiven. But I have not seen anything to address the rent question.
Okay. Got a question here from Tina. It says, we're a qualified subchapter of a parent company. The parent company manages only our company and does not have any employees itself. I'm running into an issue with our bank for one question. Are you owned by another company? If I say yes, it kicks us out. Does not give any option to explain, still not able to apply.
John, let me address that, because that sort of speaks to how we're approaching processing applications. We are actually partnering with a fintech company called SmartBiz which has an automated front end system to where our customers will be able to go and apply online directly. Obviously, that's a very processed portal, and so there are certain clients that are not going to be eligible there. One of the requirements is that all the owners to use that particular portal that we're going to offer has to be natural persons. I don't think by the fact that you're owned by another company prohibits you from applying to PPP. But in the case, if you're working with our bank, it's going to kick you into more of a manual process rather than a fully automated process. For instance, there was a lot of confusion about churches and whether or not they would be eligible. Churches are not owned by natural persons, so we're going to have to process all the churches that submit applications with us through a manual process rather than through an automated process. So those are the issues we're dealing with. So as I mentioned when we started, we have 2 channels. We're going to try to get most of the people through the FinTech channel where they submit their application online directly, but there are going to be situations there where they get kicked out and have to come in through our internal processes. So, I also, John, before we lose folks, I want people to remember that, while you're losing your patients and you're frustrated, there are other things you can be doing to help get your company through this. And I know all banks are considering deferring and forbearance payments. So if you have an owner-occupied building that you have financed with your financial institution, even if you have a non-owner-occupied building with tenants and you're dealing with the fact that your tenants may not be able to pay, the federal regulators have given banks a lot of latitude in working with you, and hopefully this short period of time. So, I mean, we're looking at we have to look at each of those individually, but we're looking at deferring both principal and interest payments up to 90 days for those type of loans. And so you should be reaching out to your bank to have discussions, in your banker to have discussions about the opportunity to do those kinds of things to help mitigate your cash flow issues.
Thank you, Terry. Good insight for sure. Here's one. I think I've got probably room for 3 more questions and then get us to start to close out. So here's one. The PPP is based on an average amount head count per month for 2019. What if our business added multiple employees starting in Q4 2019 and going into 2020, thus dramatically increasing the monthly average? The average monthly payroll amount for 2019 will be much lower than existing monthly payroll total. Jeff?
So for one thing about that, I would assume that would mean that in 2020, you have more employees than you had in 2019, which will help on the forgiveness side of things because you won't have any problem spending the proceeds that you receive because you have more employees. And then in regard to the amount that's allowed for the loan, there's no provision for that circumstance. You simply have to take an average for the 12 months. And there's, go ahead.
Jeff, I remember, and I can't speak to the specifics, but the law and the Treasury regulations did speak to companies with seasonal employees. So, I mean, I would look to them to see whether or not they could calculate the payroll based on seasonal employment.
Yeah, and that's a good point. There is a seasonal employee calculation where you can use, I don't have that in front of me, but I think it's a period prior to June 30th. But in their case, if it was right at the end of the year, it might not help. So yeah, so I would say calculate it using the seasonal employee law and then calculate it using the average for the year, and then whatever's the highest is what you would use.
David just asked this question. I saw the notice on my bank's website starting today with the issuance of the final rule. Borrowers cannot apply for both EDIDL and the PPP loan program. I'm looking at 3 bankers with kind of frowns of shaking their head.
Considering that we got what was called the interim final rule, which is a little bit of an oxymoron, there will be different interpretations as they go. I have not seen that yet. The last I saw is that you're eligible to apply for both the EIDL and the PPP, but you can't double count the same things that you're using in both. In other words, if you try to say in the EIDL that you had employee issues and you lost employees and you're trying to use it for payroll, you can't do that in that loan and also claim it as a basis for getting the PPP loan.
Okay, and I see a question over there. Somebody paid themselves by using the funds from the 401k. In a sense, wouldn't that still be, as long as you're showing that, no, Terry? As long as you're showing that to be income, does it matter really where the source of the income came from if you're paying yourself that as a payroll expense? Terry?
I think that's a Jeff question.
Okay, so
All right,
John.
Yeah, Jeff.
Sorry, first of all, I'm sorry.
Terry's on mute.
Yeah, and just to, while you were talking, I was looking up the seasonal employee rule, and it's basically if you're seasonal from the period of March 1st through June 30th, they allow you to use a calculation for that period of time. But okay, so on this question, John, can you restate it? So they're using proceeds from a 401k, and then And then what are they doing? Using that money to pay themselves?
Correct. Correct. So they're using that as a loan to pay themselves, to pay their own payroll. My gut instinct would be it doesn't matter where the source of income from, whether it's customers and profit and loss, as long as you're showing that then shows up in your 941 and you're showing that as a payroll format, wouldn't that be considered your income, your payroll that you should be able to submit? Doesn't matter
if you're,
source.
yeah, that's right. If you're paying payroll, it doesn't matter what the source of the cash was to pay your payroll. It's really the fact that you're paying payroll. So you're correct, John.
Right,
Right.
but that would have to go through the payroll records, right? If she's not running that through,
Yeah.
she's not getting a pay stub, then I'm not sure she's going to be able to count that.
Yeah, it would have to be part of her normal payroll. But the source of the funds doesn't really matter for purposes of the calculation. It's the fact that you paid payroll.
Yeah, I mean, if she's just taking a distribution from her 401k, that's not payroll.
Well, I guess so Terry, you bring up an interesting question. If you take that distribution and then you do process it through, it's almost like if you're taking a shareholder loan, if you're borrowing from the shareholder to the corporation and then using that for payroll. So I guess to Lloyd out there, after we're done, because I know we're about to wrap, if we need to go a little deeper to help you there, then I'm going to share some information here in just a minute. I want to throw the last question over to Clark. Clark, help us with two things. Go over the timelines again. So when you talk February 15th, June 30th, December 31st, those type of dates, what those mean, as well as I guess we got the unemployed options for sole proprietors and 1099 folks for Friday this week. So let's do a timeline. The other thing, will you explain to the folks that are out here today how the banks, what's happening from the banking world? Where does this capital come from? When do you guys get made whole? So people understand what's going on with the banking industry as to why they're able to take care of only so many clients maybe at this point in time versus down the road.
Okay, John, you just laid a lot in my lap and we have 30 seconds and you want me to do this? All right, I'll try to do the best I can. February 15th is the date that you have to be in business. If you weren't in business by then you don't qualify for this program. That's when the CARES, when all this stuff started. Let's see, last Friday was the first day you could make applications. It's my understanding the guidelines will be out so that independent contractors and self-employed can do it by this Friday. Haven't seen anything yet, but this is the 7th, so we got 3 more days till that can come. You've got 8 weeks to spend the money. And that's the way this is set up. What you're asking for is 2.5 times your average payroll. 2 times is basically 8 weeks worth of payroll. The other half is basically to cover your overhead for 2 months. That's where the math came from. So you got basically 8 weeks to spend it on payroll and 2 months to spend it on overhead, rent, utilities, and interest can be paid on debt that existed before February 15th. You can't use it on debt you just got to get you through this, but you can use it to pay interest, not principal payments. It's all supposed to be spent by June 30th. That's the deadline that the money's supposed to be spent by. I got a feeling if this thing stretches out a little bit before we can get money out, it might be extended, but that's what's in the act at this point. I think that covers most of it. And then there's a period of time you've got a 6-month deferment on the loan that you don't have to pay any interest. But if you submit for forgiveness and you end up with a balance, then you pay 1% for the remaining period of time, whether from the 24 months. The loan is for 24 months. If you take 6 months in there to get it resolved, so you got 18 months to pay the balance off at 1%. I think that pretty much covers all of that. On the banking side, basically we get our money once we get approved and we do it, we disperse that out of funds that the bank has. That's why you hear an awful lot about liquidity in banks, because it's our money that we're lending out. If we run out of liquidity to fund the loans, then that's why some banks are saying they don't have the capacity to cover but X amount of loans. The other thing that gets in, and this gets a little wonky in there, so I won't try to dive too deep, but banks are required to have a certain capital base to be able to operate safely in today's environment. And most banks are well capitalized and ready to go. But as we add this loan, if you think about $350 billion, Vinings Bank, we're a $400 million bank. We can't make $350 billion in loans. And we're thinking that we'll probably be in the $100 million range before this all gets over, and that may be on the loan side. But what that does is we add $100 million worth of assets. You look at what we have in our capital, and while we normally have about 8% capital, this could drive it down significantly. The regulators get real antsy when we get down into a lower capital base because they're worried about the safety and security. The FDIC is an insurance company. They're worried that if the bank goes out, they got to pay for all the deposits that are FDIC insured. So that's where that comes from. Now, the other side of the coin is this should be a temporary situation, and that by 6 months, 8 months into this, after all the money has been dispersed, we get in there and we're able to apply for the forgiveness of debt. That money then comes back to the bank to repay those loans. The assets will then shrink down, so the capital base will grow again, and everything should be okay. But you're going to hear things about banks' capital levels not supporting this. We are asking the regulators to be cognizant of what we're trying to do to help get this money out, because the real key to this is getting money in people's pockets so that they are able to spend once the economy opens up again. And if we're constrained too much by capital levels, we won't be able to do this. But we're trying to work our way through it. So far, the regulators have been cooperative and understanding. We just hope that that continues and that we don't run into a catastrophe we did with the crisis several years ago. Right now, we don't expect that. We think everybody recognizes that as the COVID-19 passes away, we're able to get back out, get the economy going, that all this will, I don't know what the new normal will be, but it won't be as bad as we've been through. So everybody just, be patient. There's a lot of misinformation out there, so be careful what you read and try to verify if something doesn't sound right, particularly if you get an email from somebody that says, hey, we can get you a loan in 24 hours. You might want to make sure that's not a scam and be careful of that. That's the best advice I can give a lot of our members, because unfortunately, there are people that will take advantage of bad situations. I hope all your questions.
Clark, that was outstanding. Thank you so much. That's Clark Hungerford with Vinings Bank, Terry DeWitt with Center State Bank. We've got Chris Gruen here with Pinnacle Financial Partners and Jeff Facito. A huge thank you to Malden and Jenkins for all the insights you guys have brought us today. Ladies and gentlemen, as I shared on the front end, I encourage you to kind of stay connected with our chamber. We've got lots of insight and great content coming your way. As we said, there's lots of challenges out there. We do have access to tremendous resources. So one is I want to encourage you to go to the cobbchamber.org. There's resource pages as to how we can help you right now, how we can get you engaged and get you the information just as you've got an opportunity today. But at this point, I want to turn it over to our President and CEO, Sharon Mason, to close us out. Thank you all for your time today.
Thank you, John. Thank you to all of our panelists. This was great content, very timely information, especially as you all are navigating this. Thank you all for your questions that you asked. We're going to provide both the recording as well as the PowerPoint presentation. I know several of you requested that, and we're going to continue every Tuesday focusing on a different how-to business recovery topic. Next week, we're going to dive into HR, as you're navigating a lot of complexities with your team of managing all the changes and also keeping them motivated with all that's happening. And of course, we continue to have many different webinars that you will see. We have the leadership one tomorrow. We now have a COVID-19 update with Governor Kemp. We are joining with the Georgia Chamber for that on Thursday, this coming Thursday, and many more things to come to help you. We are here to help you, and we'll continue to focus on providing you the resources. John mentioned that chamber website page. We're going to update it daily, and if you see anything missing, let us know. We'll add the resources from today, as well as all of the different things we're providing for you. So thank you for being part of today. We're here to help you, and hope you have a great rest of the day.